Now, credit scores, they have a large part on what you qualify for when you are buying a home. Now, if you're thinking about buying a home, you should know that lenders review your credit to access your ability to make payments on time, to pay back debts, and more. And it's also a factor that helps determine your mortgage rates. So recently, Bankrate ran an article titled, "What Credit Scores Do You Need to Buy a Home?" And one of the takeaways that stood out to us was the following quote: "Your credit score is one of the most important factors lenders consider when you apply for a mortgage, not just to qualify for the loan itself, but for the conditions. Typically, the higher your score, the lower the interest rates and the better terms you'll qualify for." Now, this means that your credit score may feel even more important to your home buying plans right now, since mortgage rates are a key factor in affordability, especially today. According to the Federal Reserve Bank of New York, the median credit score in the US for those taking out a mortgage is 765. But that doesn't mean that your credit score has to be perfect.
That's great. Great.
In a recent article in Business Insider, it explains that generally how your FICO score range can make an impact, and I quote, "You do not need a perfect credit score to buy a home. Aiming to get your credit score into the good range, which is 670 to about 739, that would be a great start towards qualifying for a mortgage. But if you're wanting to qualify for the lowest rates, try to get your score up within the very good range, which goes from 740 to 799. In our 19 years in the real estate business, we know that working with a trusted lender is the best way to get more information about how your credit score could factor into your home loan and the mortgage rate that you're able to get. FICO, this is what they said. While many lenders use credit scores like FICO scores to help them make lending decisions, each lender has its own strategy, including the level of risk it finds acceptable. There is no single cutoff score used by all the lenders, and there are many additional factors that lenders may use to determine your actual interest rate. If you are looking for ways to improve your score, we wanted to share the highlights that experience suggests that you should focus on.
Take notes.
Of course, number one is going to be your payment history. Late payments can have a negative impact by dropping your score. So focus on making payments on time and paying any existing late charges quickly. Number two is your debt amount relative to your credit limits. When it comes to your available credit amount, the less you're using, the better. Focus on keeping this number as low as possible. And the third part is credit applications. If you're looking to buy, don't apply for other credit. When you apply for new credit, it could result in a hard inquiry on your credit, and that could drop your score. When you're ready to start the home buying process, we'll be happy to share a great local lender. They'll be able to help you assess which range your score falls within and tell you more about the specifics for each loan type available to you. So the bottom line is this: with affordability challenges today, prioritizing ways you can have a positive impact on your credit score could help to get a better mortgage rate. If you want to learn more about this, let's connect so we can get you on a path to home ownership.